Hello. First time we talk about budgeting. We heard this budgeting word a lot, right? State government needs to do their budget every year, and federal government have their budget every year, and then many cities, counties have their budget as well. Actually, many companies do budgeting as well. They don't announce it to the public. So what is budgeting for? Put in a simple term, budgeting is something, a budget is something companies make educated guesses or plans for their future performance. First, they guess their future performance. And then with the educated guess, they plan on a for to meet those targets, what should other departments do? How should we produce? How should we keep our inventory level? Whether we should hire more people or we should lay off some people. And if you also give, based on the targets, give realistic targets for different personnel. Given our expected performance, here's what you're gonna have to do next year. If you do this, we'll reward you. If you don't, you're gonna be in trouble. And also have a budgeting allows a lot of companies are big, and the bigger companies are more likely to have budgeting. Why? Because bigger company inevitably they are less flexible than smaller companies because the command chain is much longer and it takes longer for information to arrive at the top or from top to the bottom. So having a budget makes communication easier. It's easier to see whether some operations have problem or not if you are given a budget beforehand. So budget is easy. But let's guess. If you make a budget, where should a budget start? And what is the most important activity for a company to survive or for you to be able to set up a company? You're gonna make sales, right? So sales is an important thing. First, you're gonna have an idea of how many units, what's the revenue you're gonna have for the next period. It might be 1 year period, 1 month period, or 10-year period. I don't know, depends on you. So you have this idea of how many sales you can have, then what's next? And to achieve the sales, you have two options. You can do one of the two, or you can do both. One is to produce, the other is to buy and sell, more like a retailer. You can do both if the production doesn't meet. But you have to make plans. You have to decide, hey, whether we can produce or have enough inventory for sale, for the expected sales. And if we don't, what are we gonna do? Do we keep it as it is, or do we produce, try our best to borrow money to produce more, or do we buy from some other people at batch and sell it to my customers? So you're gonna make a plan. And when you have these ideas in mind, that means you are making also a production plan. For production plan, you have to know for this period how many units I have to make, right? How much resource it has to be consumed. And by the end, how many inventory do we have to keep for next period, first production. And you're gonna know, okay, how much raw material to purchase every period, and how many people to hire, how many laborers you're supposed to commit, and what's the overhead and how much every period. And then it's not enough, because you're gonna hire different people. For your company, you have to decide, for example, how many accountants to hire, how many salespeople to hire, and what is your sales promotion policy. So you will decide other expenses as well. And you will also make budgeting about your debts. If you want to increase production, you have to borrow money. And how much money do you need to borrow? From whom you would borrow? And based on performance, what interest rate that might be. Those are becomes that part of budget. And more to our, particularly to our class, easier to understand. You have to make inventory budgeting as well. Let me ask you this question: why inventory needs to be budgeted carefully? If you run a business every month's end, do you feel happy if your warehouse is empty? Some people might say, hey, it's good. We sold everything, so it's much better. I would say that you can do better because why? Let me ask you this. If you want to buy some stuff and you check Amazon, Amazon shows sold out, what do you do? And they said restock in 7 days. What do you do? I think most people would pick, for example, places like Best Buy, Target, Walmart, Lowe's, whatever online retailer you find. You lose a customer, right? Because you don't have anything in inventory. You could have done better, but you didn't because you don't have anything for sale. You're losing customer. So my point is inventory needs budgeting as well. Every period and for the next period, you want to make sure you have enough raw material. You want to make sure you have enough manpower you can use. You want to make sure you got enough overhead you can commit, and you want to make sure you have finished goods. in your warehouse. You want to make sure you have WIP for some inventories in your warehouse as well, so you can start to make new ones. Keep the product line or product train, keep it steady, right? To make your business grow bigger, so you might need inventory plan as well, right? Namely, how much we need by the period end for the next period, how much we will sell, and how much do we need for that period end, and how much we should produce. Then we are talking about real business. So before we touch those topics, let me ask you another question. We just mentioned, right? Everything starts from sales budget, because if you cannot sell, what's the point of producing too many? It's going to make you worse off. So for sales budget, if you are the boss, do you want to set a budget? Because we set a budget is for performance evaluation, right? Part of it can be used for budget is like a target. So if some people do better than that, then they should be rewarded. If they did worse, they should be disciplined. But we also mentioned like production, like inventory budget, they should be based on sales. So think about it. Do you really want to make a budget that requires, hey, this is our plan. We sell, once we achieve 1 million sales, we are good to go. We don't worry about anything. Or do you want to tell people, hey, try to sell as many as possible, and I will adjust production plans as much as possible? What's the problem telling people 1 million is good? People lose incentive. People don't want it. Don't want to work harder because they met the goal already. Or in worst cases, sometimes the sales is hard just because price went higher, just because everybody wants it. It's not really your sales people work harder, and then you are still rewarding people. What I'm talking about is when you make sales plan, sales budget, sales should be dynamic instead of static. What do I mean? Meaning that, okay, you tell people a baseline sales and you make plans for different level of sales. You may have revenue for 1 million, but don't stop there. You should have plans for revenue 1.5 million, 2 million, 2.5 million. And according to these, you can make different plans for production, for inventory, and for expenses for cash. Okay, these are important. Let's take a look. So this is pretty straightforward. We start everything from sales budget. And based on sales, we arrange production. Like I said, production might be a combination of purchase from finished goods from upper level suppliers, upstream suppliers, or maybe just producing by your own. So based on sales, we know, at least based on the knowledge of production capacity and whether they have money to increase production or not, from sales, we make production plans. And from product, what allows us to produce? We need the direct material, we need the direct labor, and we need overhead. So those with the knowledge of how much to produce, at least we know how much of these we should prepare for, right? And with the sales, we also get an idea of setting an administrative expense budget. And from those, raw material needs to be stored, and the WIP needs to be stored, and inventory needs to be stored too. And especially inventory, like I said, you always want to make sure you have enough finished goods for customers to buy. You don't want any day you're out of supply for like 7 days, you're going to lose all your business, right? So from this, we make any inventory budget. And from production and inventory budget, we kind of know what's the cost, what sales we can have. Or we know that from sales budget, we know how much we can sell, and we know how much we can produce. So this cycle sort of goes 2 ways instead of 1 way. And from all these information, we have a budgeted income statement. And then from all these cash, some requires cash payment sooner or later. So we have cash budget, and we have different things. So sales is a grand opening of the budget of an entity. Usually it's this way. And let's go to see some exercises, meaningful exercises, to see what we are talking about. Let's start from exercises. So here's an easy one. Prepare a sales budget. Patrick incorporated sales industrial solvents in 5-gallon drums. Patrick expects the following units to be sold in the first 3 months of the coming year: January 41,000, February 38,000, and March 50,000. So again, this is more like a educated guess based on their past performance, based on their historical performance. Companies make educated guesses to figure out what sales, how good they will do for the next period, right? So the question I'm moving here, so we will be able to just, I think showing you on Excel is more straightforward, and we can compare to the actual answers. So we know here's January, February, and March. And the sales units were 41,000, 38,000, and 50,000. So what is budget again? Basically, budget have different purposes, functions, but budget is just educated guesses of numbers. So we know the price is 35 for the 3 months. So guess what the sales budget could be. That's just the products of sales quantity and the sales price for each month. Let's see if we got it right or wrong. Oh, okay, I need to check my work, sorry. Is there any way? Okay, I won't be lazy. Let's skip the total. All you need for total is to add it up. What's the difference? Sometimes different month sales might be different, and we need to be aware of that. In our case, they are the same. 143,500. And what's the next one? 133, 10,000. And 175, 10,000. Oh, let me. So let's see if I got everything right. Yeah, I will skip the total because I thought it's not too difficult to figure out. Okay, so let's take a look at this one and we can call it a day. Okay, so again, this is nothing different. Sales for January is 41,000, for February is 38,000, and for March is 50,000. And obviously we don't need April sales here. And then the desired ending inventory is clearly stated. Let's read everything first. Patrick's policy is to have 25% next month's sales in any inventory. On January 1st, it's expected that there will be 6,700 drums of solvents on hand. Based on my limited English knowledge, I think it means that's a beginning balance, right? That's a beginning balance. It expects, meaning that it didn't follow the plan. Because here you can see it's kind of weird because what we know is, for example, the beginning balance of January equals to end balance of December of the previous year. Basically, the beginning balance of this period equals to the ending balance of the previous period because they are neighboring periods, and technically speaking, there's much less than 1 second difference between 2 time points, so inventory level should not change. And with those, even if they don't tell us it's 6,700, we should be able to figure out the beginning balance for January if they follow the rule, right? So when the question, for example, let's do this. So desired ending balance of January is going to be a quarter of February sales. So I think it's going to be 9,500. And the February ending balance is a quarter of March sales. And March ending balance is a quarter of April sales. Yep, I think so. And then, what do you mean by total needs? For January, you need to have at least 41,000 units you can sell, and you need to make sure after you sell, you have 9,500 left in your warehouse. So meaning that you need what you used to have from the beginning, what you had from the beginning, plus whether you make it or buy it from upstream suppliers, you need enough. You need to have basically production or buy plus beginning balance should equal to sales plus desired ending inventory because that's the amount needed. And beginning balance plus production or sales is amounts you actually have. So they should meet for planned budget to work. So the total need here is 5,500 for January, and 5,500 for January again, and 62,750 for March. And the beginning inventory here, like I said, we know that it's going to be, I think they're making our life easier, but it's lose the consistency, which I don't like. We know that beginning balance of the product of January is 6,700. But even if we don't, we can still calculate it, because according to the policy, beginning balance equals of January equals to the ending balance of the previous December. And if they follow the same policy, the ending balance of December of previous year should be a quarter of January sales of this year, which means it should be 10 to 150. But they give us specific number, I guess, testing us whether we read the numbers carefully or not. So it works, I guess. So beginning balance of February is the ending balance of January. So 9500, and here we have 125. Oops. So here now we get the answers we want. There's total needs, and you have some already. The question asking how many more do you have to produce, right? So here I think it's 43800, 41000, and 50250. Oh, okay. I'm missing the one here, I think. And 250. Sorry about that. You're never too careful in accounting world. Okay. So, and of course, you can make it a little bit more complicated. For example, with the knowledge of for each product, how many direct material, overhead, and labor has to be committed. We can also calculate how many raw materials to purchase. And for raw materials, they have a plan as well. For example, they can also say the ending balance of previous month's raw material should be at least a third of the next month's production usage. Then you make similar plans as well. But one point of learning is to be able to learn it, the same spirit, and apply to different settings, which I encourage all of you to do. So I leave the rest of the fun to all you guys, and this is the end of this chapter talking about budgeting. Thank you very much.